Are you a teacher, a veteran, or a first responder and you're looking forward to buying a home? Well, there are certain programs that are just for you, and that's what this video is going to cover. So don't go away. We've got all the information, and we've got our favorite loan person here from Prosperity Mortgage. Please subscribe and like this video and comment below. We'll be right back. Hi, I'm Susan Phelps with Berkshire Hathaway.
Oh, no, this could be so much
Home
fun.
Services, Florida Realty, and today we have Peter Mendoza with us from Prosperity Mortgage, which is Berkshire Hathaway's affiliate lender. We're so fortunate.
And I'm Judy Atari, also with Berkshire Hathaway Home Services, Florida Realty. And before we dive into this riveting information, I wanted to go ahead and thank Homes by West Bay, who has generously welcomed us into their gorgeous Key West 2 model in Star Farms in Lakewood Ranch. Star Farms is an amazing community, multiple amenity centers, multiple builders, great place for different family members to buy their different homes. Anyway, we'll give you a little glimpse of what's here, and we're going to come back and do a full video on here. But we're here for, we're going to talk about buyer programs and specialized buyer loan assistance, things like that. So, Peter, can you tell us a little bit more about the Hometown Heroes programs, the VA loan and benefits, and other programs that you guys work with?
Absolutely. So let me start with Hometown Heroes, because that's one of our most popular down payment assistance programs. So what this program does is it provides funds for down payment to help you with the down payment and closing costs. The requirements are that you have to be a first-time home buyer, first of all, okay? And then for Hometown Heroes, there's certain occupations that you have to be, in order to qualify for the program. So it does focus on like first responders, so firefighters, policemen, teachers, social workers, nurses, things like that. So those kinds of occupations, if you're in one of those occupations, then you can qualify for that program. The credit score is a little bit higher, the credit score requirement. Instead of 620, which is normally what we require, this program requires a 640. It's still a very, doable threshold. Most people do qualify for this program.
And that's a down payment assistance program.
That is a down payment assistance program. So what this program does is it provides funds for down payment and closing costs to help you. So it's be somebody that can qualify for the monthly payment. They have good credit, but they just don't have enough put away for down payment and closing costs. So this program actually provides that assistance to help them purchase a home, as long as there's a first-time home buyer.
Right. And on the assistance part, is that a gift or a loan that they're going to eventually pay back?
It's essentially a loan, so it's what's called a non-amortizing or silent second. So you don't make any payments on it, there's no interest on it, but when you sell the home or if you refinance, then you essentially have to pay that back.
Very cool.
What about there's another assistance program from Florida Housing, isn't there a group of assistance programs?
Correct. So this Hometown Heroes is a specialized program. Every year, funding has to be approved by the Florida legislature for that. And so once that funding runs out, then that money is no longer available. You have to wait until the next year. But having said that, we have other programs that are available also from Florida Housing that they're funded year-round. And they also provide the down payment assistance and closing cost assistance. And the big difference there is with those programs, you don't have to be in one of these targeted occupations. So it can be anyone as long as you live in Florida and you're a first-time home buyer, then you can qualify.
Okay.
So, let's talk about first-time home buyers, because when I got into the business, this surprised me. When is a first-time home buyer not a first-time home buyer?
Good question. I get that a lot. So a first-time home buyer, the definition of that means that you have not had an interest or owned a primary residence within the past 3 years. Okay, so that's simply put, that's what it means. So as long as you haven't owned anything in the last 3 years, you qualify as a first-time home buyer.
So I owned a home, and I moved to Costa Rica for 3 years, and I come back, I'm a first-time home
You're
buyer.
a first-time
I
home
was
buyer
thinking, I
now.
was thinking,
Myself,
I was thinking
sold.
of going on a 3-year
Yeah.
cruise, but I like Costa Rica.
That's whatever.
Yeah, so good. That's a lot of people like, how does that work? And then we want to review real fast the benefits of the VA loans and how those work.
Right, so the VA loan, it's obviously intended for veterans. The main benefits of that loan is that you can get into that loan with no money down. All right, so there's no down payment required. And then there's also no mortgage insurance, which is also a big
Big
benefit.
plus.
Big plus, exactly.
Very cool. And how do I find out about these programs?
Well, you call me.
Well, sometimes your realtor, Judy and I, because we know
Exactly.
Peter, and we
Yeah.
do these videos, we know.
Yeah.
But always ask.
Yeah.
Yep.
What are
Always
my
ask.
options? So there may be different options for you. Cool.
So you've gone through the process of putting your application in, and you've verified all the income and so forth, and that they're pre-approved, and they're going to take that pre-approval and look at it and go, okay, so I can buy a home for this much because Peter says that I can handle that. You go along with that, but you also know that there's realistic budgeting that has to happen in your own, financial life, because what Peter has told you can afford is the mortgage payment. That includes the mortgage and then taxes.
Taxes and insurance and HOA if applicable, yes.
And HOAs are so prevalent, it's just part of the package now. When I was buying a house, I'm not in an HOA neighborhood, and that wasn't even discussed. In fact, it seems like when I first applied for a mortgage for the house that we're in, it was during that time where all you had to do was breathe on the paper. Because I seem to recall my mortgage lender sitting there, she was a broker, and she just scribbled out and said, okay, you can afford this much. And I was like, let's go look. But it's not so anymore. Peter's going to look at things in a realistic fashion. Go
Yeah,
ahead.
and what I would add is that what I do is I always look, once I go through my pre-approval process, I'll let you know, well, you're pre-approved for this purchase, with this amount down. But I also have a discussion about the monthly payment, because it's important that, I can tell you, hey, you're pre-approved for a $500,000 purchase, and you go, oh, that's great, but then here's the monthly payment that goes along with that. And you have to be comfortable with that monthly payment, so, because you're the one that's gonna have to make that payment every month. Many times I have people that tell me, well, no, I'm not comfortable with that payment, I want a lower monthly payment, because that's what I'm comfortable with, so then I can adjust what their purchase price is and tell them, okay, if you want this monthly payment, which is lower, then this is what you can qualify for.
And you're counseling people based on present reality, not what their future plans are. I mean, if they sat there and said, well, we're going to have a baby in the next year and my wife needs a new car, that's not something that you're really working into the formula.
Correct, yeah,
So
Yeah, if we have a baby, we may have one less income.
exactly,
So
exactly.
talk about this.
all of those things have to be considered in terms of
Yeah.
what you can truly, realistically afford. And Peter, I don't even know if you're allowed to ask those kinds of questions. It's not on the loan
It's
application.
you're absolutely right, but I still have that discussion just to let the buyer know that, yes, you're pre-approved for this much, but remember, you have to make that payment. You have to be comfortable with that payment.
So we're looking at getting you approved and finding you a fit, and not just because you can spend this much, it's going to be something, as Peter said, something you have to be comfortable with.
Right. So there's a couple other little things that we wanted to bring up that to explain or people might not expect to have in the transaction. And one of those hidden or unexplained costs is title insurance. So what is title insurance? Why is it important? And why might I see two charges for title insurance on my closing
Yeah,
statement?
great question, because I do get that question a lot when people review their final closing documents when they're sent to them. So title insurance is, it's required for a loan. There's something called lender's title insurance that is required. What that does is that it protects the lender in the event that someone comes out of the woodwork, say, 3 or 4 years down the road and say, oh, I have an ownership stake in this home. So if that's the case, then the title insurance protects the lender from that situation if that someone else is laying claim to your home. So it is something that's required by the lender. It'll be specifically spelled out as lender's title insurance. There's also another flavor of that called owner's titles insurance, and that is really for the same protection but for the owner instead of the lender. It's not required. In many cases, it's recommended that you do it, but you don't have to do it. And that's why you would see two different line items. Either you'll see lender's title insurance, which is required by the lender, and owner's,
If
which
you
is
have a
not.
mortgage. If you
If
don't
you
have
have
a
a mortgage.
mortgage, there's no lenders, obviously.
Correct.
So if the lender has title insurance, why do I need to get it? Won't their title insurance protect me, the buyer? Does it help me to defend myself against someone laying claim to this house?
No, well, the lender's title insurance protects the lender.
Yeah,
All
so
right.
you're on
So-
your own.
All right.
Yeah,
Yeah.
exactly.
That's why you want title insurance.
Okay, so basically, if I have title insurance and somebody comes to me and says, my great Aunt Bertha really had title to this house 50 years ago, and I have a will here that gives me partial ownership. And I say, well, no, that's not the case. And they say, yes, it is. Who takes care of that?
With the title insurance?
Yeah.
With the lenders?
No, with me.
With you? Oh, that would be
Or the
taken by,
lender.
by the owner's title insurance.
Okay. So basically, the title insurance is going to either handle that matter or they're going to pay for it.
Correct.
Okay.
It's
Okay.
protection.
And
It's-
our title partners, Florida Title Guarantee, can answer a lot more questions if you have them.
Yes.
So we'll
We may have
connect you
to
with those
do
professionals.
some video with them to do that same educational segment that we're doing today. This is the third
Yep.
of 3 videos that we're hoping will educate our
I
viewers.
still have a question.
And okay,
I'm not
I'm
done.
sorry.
So I wanted Peter to talk about the escrow process, and how quick it happens, and are those dates really important? And contingencies. So what is the escrow process and contingencies in the loan process?
What does escrow mean?
Yeah.
It's a weird word.
And where does it go?
Okay. So escrows are for taxes and insurance. So if you put down less than 20%, then you're required to have escrows for taxes and insurance. And so what that means is that every month, when you make your monthly mortgage payment, you're going to be paying a little bit extra towards your taxes and insurance. And then when those bills come due, so for example, here in Florida, taxes are due once a year. The insurance you can pay once a year when it renews. Then that money that you're paying, that extra money that you're paying every month, it goes into an escrow account that's maintained by the lender. And then when those bills are due, then the lender goes into that escrow account and pays those bills out of that escrow.
And we're speaking insurance on the loan, not property taxes.
No, we're talking
Both.
about property taxes.
Property taxes too?
Property
Okay.
taxes,
Yeah.
yeah,
Okay.
it's property taxes.
Okay.
And then sometimes you get a bill at the end of the year if your property taxes has gone up,
Yeah.
or your insurance has gone up, and you have X amount in your escrow account, and it's not enough, then you're going to get a bill.
Yeah, so what'll
Or
happen
your
is
payment's
that,
going up,
yeah,
right?
so the lender will reevaluate. Once the new taxes come out, the lender reevaluates what the new taxes are, how much they went up, how much you have currently in the escrow account, and is there enough in there to make sure that they're gonna be paid when they're due. If there's some adjustment made, then you're notified and said, hey, well, you have a couple of options. Typically, you can make up the difference in a lump sum, or you can have it spread out over the next 12 months. So they just
Raising
take
your- yeah.
raise your escrow amount every month.
So before we're finished, this is something that people find surprising. What happens to a loan once it's closed? Like, I deal with you, I've done all my work with Peter, I've worked with Prosperity Mortgage. Where does my loan sit, or what happens?
Okay, so typically what a lender does is after the loan closes, that loan is sold off into the secondary market. It's sold off to investors, and that helps create and maintain liquidity for lending. So the other thing that happens is that the lender typically does not collect your payments that you send every month. So they bring on a loan servicing company that you will end up sending your payments to. So the first couple of payments will typically, if you did the loan with us, with Prosperity, the first couple of payments would come to us, but then you will be notified that there's a new loan servicer, and you go and you contact them and you set up an account. So that's one thing that when you ask, what are some people surprised afterwards? I get that question a lot. I get a call, hey, well, I've got this letter and they're saying my loan's being sold or transferred here. Is this legitimate and so forth? Because of course people are afraid these days of all the scams and so forth going on. So that does surprise a lot of people.
Okay.
Cool, thank you.
Well, we hope that this has given you some clarity and confidence to move forward. And we're here to answer any of your questions. You really need to be informed to make these critical choices. This is the biggest purchase probably that you'll ever make in your lifetime, and you want to be sure that you do work with a reputable lender and realtors, a team that's going to see you through to the end and support you thereafter. So again, please subscribe and like, and look for these videos on our channel. If you, it's going way too long.
Yeah, send us questions, suggestions, yep. And we're good.
Okay, until the next time, bye-bye.